Not late. Not late. Kris is actually on the road. He'll be here in 10 minutes or so, but we're going to keep this show at the regular time. Not late. Just saying. Gotta tell you, while I was building out the presentation, here's the one that I had done in my spreadsheets for the Seeking Alpha article. I decided to do a different one. And I'm just about done putting it together. So I'm actually glad that Kris is running a bit behind schedule. Because it gave me time to put this together. Oh, glad everybody making it here. Have I seen Nvidia? Is there something that I should be aware of with Nvidia? Hold on. And I know about the chips. Oh, look at that. Boom. Boom, boom, boom. Let me guess. Now, I haven't seen it, but let me guess. Dan Ives was on CNBC because of this? Nvidia, AMD, Intel rise as Trump approves sale of H200 chips to China, asks for 25% cut. Oh, my God. You can't make this up, everybody. Can't make it up. Quote, I have informed President Xi of China that the United States will allow Nvidia to ship its H200 products to approved customers in China and other countries under conditions that allow for continued strong national security, Trump wrote in post on Truth Social. President Xi responded positively. 25% will be paid to the United States of America. This policy will support American jobs, strengthen U.S. manufacturing, and benefit American taxpayers. Supposedly, the Department of Commerce is finalizing the details. Okay. All right. We'll take it. We will take it, everybody. That's good news. Good news. As I said the other day, and I will continue to say it, Nvidia, my opinion only. Before we give my opinion, we should throw this up. Please freeze the video. Read the disclaimer. I am not a financial advisor. I am not your financial advisor. Please do your own due diligence. Please make the best decision possible for what works for you. I have no idea what your situation is. And I am just giving my opinions based off of my research. And you should take everything I say with a grain of salt, because I'm just some guy sitting in some room with a video camera that just does a ridiculous amount of research. So, with that being said, and making sure that you read the disclaimer, I think this is super bullish Nvidia. Super bullish Nvidia. Chels, you know what? We're going to fix that. Hold on. Give me a sec. Is Amit live right now? I thought Amit was freaking sick. I didn't know that Amit was freaking live. I don't like going live when Amit's live. I'm going to text him right now like, I thought you were freaking sick. I thought you were sick. All right. We'll see what he says. But, all right, I need to go to my channel. We're going to fix the whole mod situation. All right. Yeah, I'm staying on. I'm not I'm not going anywhere. I'm staying on. I'm just saying I thought Mitt was sick. Well, I appreciate you guys leaving for my stream. The reason I don't like going live when Amit's live is I don't want to pull anybody from him. So I didn't, I mean, I texted with him. I thought he was legitimately sick. So whatever. We're not leaving. I'm here. By the way, I got to tell you something. My neighbors must think that something's wrong. Somebody like else lives here. Because I was just blasting music for the first time in God knows how long while I was building out this spreadsheet. And it's normally something I don't listen to also, which was interesting. Because I think I may have mentioned this like a week or two ago. I can't believe. Now, I'm either going to say how good or how underrated. Red Hot Chili Peppers, underrated band. Swear to God, underrated band. Freaking amazing. All right. Go put one more. I got to put one more slide up. And once Kris gets here, we'll go live with this. I think you guys are going to like this. And look, to a lot of people, Cisco is not an exciting company. It's exciting to me, though, for a lot of reasons. And I think after I go through these reasons, you're going to see a lot of interesting things. So hopefully everybody had a good dinner since the last stream. And hopefully everybody's nice and relaxed. Oh, really, Chels? Yeah, Blood Sugar Sex Magic, great album. That's the one Under the Bridge is on. Mother's Milk is an amazing album. I really like Red Hot Chili Peppers. All right. Last two slides thrown in here. I'm going to have a 9-slide deck for everybody. And we can build out some additional stuff if we need to. All right. It's done. It is done. By the way, does Amit sound like he's sick? I don't. All right. He is here. Never fear. Kris Patel.
What's going on, Steven? How are you?
I'm doing good. How are you?
Good, man. I just went to a Thai restaurant with my wife. So starting tomorrow, she's going to be working remotely now. So it's a very new development for us.
Whoa.
Yeah. So I'm going to be working from home and she's going to be working from home. So it's like, I don't know. I'm actually thinking about it now. And I was on a cabin trip with my friends this weekend and we were talking, and I think with the exception of 2 people, everyone else is remote, and they're remote for the most part. I think maybe they have to go in like once or twice a week now, but for the most part they're all remote. And even when they do go to the office, they're only going for like, I don't know, like to hot swap like a hot swapping desk, because I think their organizations kind of realized that they were just spending so much money on these commercial office leases and they're not necessarily adding that much value to the the company's bottom line. So they've decided that work from home is going to be a lot more permanent than before. So I don't know. It's such a weird thing to see. Like what have you noticed from a trend wise thing? Have you noticed like, I mean, because you're in New York City, right? So New York City is a little bit more heavy on the commercial side. So what have you noticed?
So this is what I will tell you.
Hmm.
Pre-pandemic, if you got to my building, and I'm in a Class A building, huge building, okay, legitimately 7 to 15 minutes to get an elevator, and I want to say there's 24 elevators in the lobby.
Hmm.
I mean, there was hundreds and hundreds and hundreds of people from 8:45 to 9:15.
Right.
Still to this day,
Hmm.
if I'm in an elevator with 4 or 5 people, that's a lot. Normally, I'm in an elevator with 3 people, sometimes 2.
Hmm.
It's just the company, and my building is still, I think it's still at 95% capacity, and people are just not coming back to the office. Now, there's more people in New York City. It feels like when you walk around the streets,
Hmm.
everything's back to normal. Just my building specifically, I'm not seeing the foot traffic. And I go in 3 days a week. So maybe it's the days I'm going in because
Hmm.
I choose to go in Mondays and Fridays.
Yeah.
A lot of people don't go in on Fridays.
Yeah. Yeah, I've noticed that trend as well. Like just I don't know, maybe people in the chat, what do you guys think about this whole like commercial real estate kind of phenomenon that's happening? I thought we would have actually recovered a lot more than we have so far. So it's such a like I said, it's so weird to see the the fallout of all of this. And I think one of the I wouldn't call it crisis, but one of the challenges that I think we're going to see in the next probably like couple of years is a lot of these older buildings, their leases are going to be running out. And so they've been revalued. They're going to be marked down significantly from what they're currently worth on the balance sheet, a lot of companies. But more importantly, a lot of these commercial buildings are all actually anchors for local real estate taxes. So I think, did you see that thing today? Like Boston, they were talking about that. They're like, you guys are trying to have this like property tax increase, but at the same time, the value of the properties have gone down significantly. So the question is, what are some of these commercial real estate companies? What are they like? Let's look at SL Green. We both had positions in SL Green for a long time.
Yep.
We did really well on it, and then we kind of just dropped it off. What were some of the reasons why you dropped it off?
So I stayed in it a lot longer than you.
Mm-hmm.
I recently exited because I had a thesis that if Mandami won, real estate REITs in New York City predominantly would tank on fears that he would be detrimental to them. So I said, you know what, it looks like he's going to win. I'm just going to exit in case I'm right. And I exited at 60 and it ended up falling to the low 40s. So
Mm-hmm.
thankfully I got out. But I stayed in it because I had an average price of like 21 and my yield on cost was like 15 or 20%. So I mean, I was collecting a huge dividend from that on a yield from cost perspective. So I held it longer, but we both did very well on it.
Yeah, I mean, we bought it when it was very oversold. The only thing is, I'm looking at some of the other properties that are out there too. I was like, maybe there's an opportunity for a mean reversion play. But to be honest, the entire space is just, it seems like all the investments currently are being made in the data center side of things rather than the commercial side. And it's definitely like an evolving situation now. And I wonder 5, 10, 15 years from now, what will be the state of commercial real estate? You know?
Yeah, that I couldn't tell you. What I can tell you is that I had dinner on the west side and I was over there for the first time at Hudson Yards in a while. What they've done with Hudson Yards is insane. And I drove past Penn Station because I parked at the garage on 34th and 8th. And That Vornado building at One Penn Plaza is magnificent now because they
Mhm.
redid that whole block. And then when I walked through Hudson Yards to go to where I was going, Hudson Yards is insane. The amount of money they threw into that project. My question is, how much do they load the balance sheets up with debt to do all this extra build out over there? I mean, the amount of cranes that you see in New York City right now is still incredible. The
Yeah.
Pfizer building, Pfizer moved their headquarters from 42nd to Hudson Yards. The old Pfizer headquarters is now
Mhm.
all apartments. They're redoing everything.
Well, the problem with trying to convert a lot of the commercial real estate to housing is that the floor plates don't necessarily align with
They're
everything. So,
horrible.
so if you think about how a commercial office building, like especially the 80s and 90s vintage office buildings were built, you had this giant square block, and then you'd have like a central core with
Mhm.
elevators running right through it, right? The challenge is to try to build, like convert it to a residential. The way that they have it is that it's really hard to basically create, like, compartmentalize apartments. And then you also have, like, you need like windows and stuff like that, and a lot of the buildings don't have that kind of like architecture to be able to convert it. I mean, there are firms out there that did something like that in downtown that I did see, but like I said, the floor plates are very restrictive on what you could possibly do with it. Not to mention there's also like zoning restrictions too. Like, there's certain areas that are more commercial than residential. So I don't know.
So I want to read this too. So this is from SL Green's Q3 transcript, which I didn't read because I have the only shares I have now are in my dividend harvesting series, so it's not many. We have now signed more than 1.9 million square feet of leases to date just this year.
Yeah.
And we are trading paper on leases that will take us to well over 2 million square feet with 2.5 months of the year still left to go. And as a result, we've increased our occupancy significantly quarter over quarter, climbing above 92%, and we're on track to hit our goal of 93.2% by end of year. So even though I'm not seeing people back in my building, which is an SL Green building,
Mhm.
it's all pretty much still leased. I mean, a 93% occupancy rate is really good.
Yeah. Yeah. The question is, what are the costs that they're leasing them at? Like, what's the square footage that they're actually getting out of it? Because remember, just because you take a massive discount on your lease terms doesn't mean that that's a good thing, especially if your cap rate is going to be going down. And not to mention, a lot of these commercial real estate companies, they issue debt and they refinance a lot of that debt during COVID when interest rates are super low, and interest rates have not come down. Not to mention the credit worthiness of a lot of these companies has not gone up. So you're kind of stuck in this really bad situation, man. So
Yeah, I mean, if it keeps falling, I'll take a look at it again. I mean, look, I like from the REIT aspect, Realty Income, which I know you don't like, NNN REIT, and Simon Property Group and Omega Healthcare. Those are the four that I'm
Mhm.
still holding.
Yeah.
And people are sleeping on Simon Property Group. Sleeping. Oh, he's got to get the hat on.
There
There
you
he
go.
is.
Yeah, I don't know. I'm Same thing with the malls. Structurally, I'm not a big fan of just retail in general. So I don't know. I'm trying to figure out like a good place that the market is kind of undervaluing right now, that I see a decent amount of recovery potential. But there doesn't seem to be a lot of places where the market is so down that you're getting any real value plays. I mean, I think a lot of the stuff is written up, and the only parts that are attractive, quote unquote, from a valuation standpoint, are also the ones that have the highest risk potential. Like, here's an example. I think healthcare, like managed healthcare insurance, is technically undervalued because of just the durability of their business model. But the challenge is you also have like a political tinge to it too, where both parties are blaming insurance companies for the cost of healthcare, where clearly I think it's more policy driven than it is like fundamentally driven by the insurance companies. Because the thing is, like, they're the front facing part of the healthcare cost system. So whenever they see like, oh, how come these health insurance companies are, their stock prices have gone up 5x in the last 20 years, like, how does that make sense? If they must be skimming off the top, that's how they got so big. And that's the kind of like logic that a lot of people are using. So I'm not sure that they'll ever get back to the PE multiples that they've had historically, unless there's like a sea change in business operations. So I think there is some mean reversion potential there, but there's not as much as what some people may be thinking. I don't know. Like I said, I don't see a lot of like great value plays out there. I think that there's enough out there for like fixed income people, but this is not the time where there's nothing that's like screaming buy, in my opinion, that I'm seeing right now. And the other things that you could do is you could chase and try to work that out. Like, I'm thinking about chasing data center suppliers like Vertiv and Eaton,
Johnson
yeah,
Controls, all them.
yeah. But even I know internally that I probably wouldn't be able to hold it, mainly because in the next 3 years, if let's say data center spending calms down, these guys are the first ones that are going to take a hit because their valuations are so far extended for the business that they have. So it's such a weird situation to be in, where you kind of know that eventually the bubble is going to pop. So what do? Do you say like, oh yeah, let me get in and play the game of musical chairs while the market is running? Or should I just, stay out of it and wait for the inevitable decline? I don't know. It's a weird time.
So the real thing is, it depends how much it's going to go up from here before the decline. Because if we go up 40%, the decline's only 30%. You're still behind the 8 ball if you wait. So I've never played that game. If I want to get into something, I just buy it and then I scale in. And if it goes down, I just buy more. Because I know I can't time this over a long term. I know I can't time it.
Yeah, I mean, that's the thing. Like, in markets like this, I typically like finding things that have a lot of safety in it, but I just don't see it. I just don't see a lot of things. I don't know. Like, I've been drawing a blank. I think I could eke out a market return, but I don't think I could outperform the market in the next probably 2 to 3 years without the market tanking irrationally and giving us opportunities like Meta. Like, Meta was a good opportunity. So.
I that's where I'm disagreeing a little bit. I think it's going to be easy to outperform the market. I just don't think we're going to see huge returns. And when I say outperform the market, I'm talking about getting 15% compared to an S&P's average of 12. And if the S&P does 20, I think we can do 22, 25. Because I'm just going to consolidate into the best companies. There's no way, in my opinion, if the market goes up, Meta's not going to outperform it. There's no way that next year Nvidia is not outperforming it. And those are two horses that I will ride right into it. Same with Amazon.
Well, the challenge that like I said, this chart is something that I'm trying to rationalize, but at the same time, I'm like, hold on one second. This is what the market is doing right now. And so whenever you see this, damn it, let me just bring it up. The Schiller PE ratio. I stare at this sometimes more than I should, theoretically, more than I should.
You should just not look at this. It's a ridiculous chart to look at.
I know, but even if I'm looking at it from the regular S&P,
that's the one to look at. We're not even expensive.
30. What are you talking about? 30 times PE? That's expensive.
I'm not scared of that. I'm not scared of that when the best companies in the market are trading at freaking 25 times.
I'm not scared. I'm asking myself, what is the best way to, I don't know, man. No, I'm not a big fan of trying to buy things at cycle tops,
No,
Like,
I get it, but here's the thing. What if we don't get a recession next year? We're going to have another 20% on the S&P probably. You're going to get a rate cut this week. You're going to get Waller. We're going to get more rate cuts next year. If we don't get a recession, this is going to be a rally that's going to last into 27 and maybe through 27. I mean, I'm going to bring up one chart, then I want to get into Cisco. I want to show you this. Let me go to macro trends because I just think that they have the most charts that are applicable to me.
Yeah.
And this is what I was showing. I think I was showing Tanner this, and I was giving him the rationale of the last time that we had 2 or more consecutive down years was in 2000 to 2002. And then before that tranche, it was the 70s. And we've had periods where, I mean, think about it, 95 to 99 all up. Even during the Bush era, 03 to 07 up. I think this is a much better era than the Bush era. I mean, even 09 to 14 were all up, and that was coming out of the crisis. So when we have 3 years, we're not even done with year 3. I think that we can have another 2 years on this run before we have a down year. Now that's if a recession doesn't happen. If a recession happens, I think next year is going to be really difficult. But if that doesn't happen, based on historical information, we could have another 2 years on this rally, maybe even 3, because of the amount of productivity and margin gain that we're going to get from AI and robotics.
Maybe. But whenever you see those constant like good years and things just keep speculating higher and higher, rationality goes out the door, in which case you want to at least, I wouldn't say get out of the market, but at least have some hedges in place so that, just in case you do get the inevitable pullback, you're not dealing with a massive 30% drawdown,
But Kris, you have a bunch of money in index funds also, right?
Yeah, I do. But that's what I'm trying to say, that I'm heavily weighted towards equities right now.
Same here.
I have bond positions too that I'm doing well on, but like I said, it's opportunities are one of those things that only come when there's a ton of fear in the market. I get that. But at the same time, and this is where like the Burries of the world come out and they try to scare the markets. And I'm not saying I'm scared by any means, just trying to rationalize being long on a market that's so long in the tooth, And
I'm not saying it's not long in the tooth. At the same time, we know that Trump is an egotistical maniac, and we know he's going to do everything to make sure next year is a good year because of midterms. We know that the Fed chair is going to be aligned with him on lower rates. And we know that this is the last time he can be president. He's going to want this to be a lasting impact for the economy. So if I had a bet, I would bet the caution goes out the window and the markets go up. There'll be drawbacks and drawdowns. But I know that if I sell my S&P 500 index funds, I am not getting back in at the bottom, and I am not playing that game. And I'm just picking spots. And the spots I'm picking at this point, quality over quantity. I'm not going for these unproven companies. Amazon over the next 4 years, to me, is an easy double. Easy.
I agree with you. I think right now, if you were to ask me, Kris, what are the best places to be next year? I'd say Google. Well, not necessarily Google as much anymore because Google's valuations have really gone
I just
on the cuckoo kazoo. Amazon for sure, Meta for sure, but I don't know. I'm trying to find pockets of safety around as well, just to make sure that I'm properly taking care of my portfolio. Like I do think I really like Norwegian Cruise Lines. Like I really like Verizon too. I really like Verizon.
Verizon right now, man. That 7% yield.
Yeah, 7% yield that's growing. You know, they've got a balance sheet that's already gotten back to somewhat normal again after their giant acquisition spree for Spectrum in the last few years, and then they kind of just did this whole deal with Frontier, which you know it'll add some debt, but it also they also there's some EBITDA there and there's some cost stripping that they could do, but just I don't know, I don't know, like. I don't see anything that's like screaming, "Oh my God, this is the time to buy," like the general market kind of thing, you know?
Only Meta is the only thing that's a screaming thing right now. I mean, if you don't think that the cycle is going to stop on CapEx, then Nvidia, especially with the news tonight, with Trump allowing the HB200s to be sold in China. So, but that's a boom bust cycle at some point. I agree with you on that. My time horizon is just a little bit longer out.
Yeah. Did you see all the what are they called? The regional banks have all recovered. Like
Yep.
TFC now is like almost Truist, which was I was super bullish on. That's almost at 47 now.
Yep.
The regional banks were an easy play. Like that was a good time. Like when I was doing finance junkies with Vitaly and Carlos and Amit, like I remember bringing that up. I said, look, these businesses are not going anywhere. They've got a lot of earnings power. They have a lot of ability to like re-engineer their balance sheets to be risk off. That one-time credit event was a very special time where people got really nervous and they threw out a lot of good companies with some bad companies here and there. But yeah,
I got a
like I said,
regional for you,
go for it.
and you're not going to like it.
PNC.
No, I got a regional for you that you're going to hate. It's not book value, but tangible book value, $17.32.
You're not gonna say first Flagstar, are you?
The company trades at $12.88.
I knew you were gonna say Flagstar. I knew.
The only thing that scares me, and here's why I'm not buying it right now.
Mm-hmm.
I don't know how they're going to fare. I need 6 months of Madami being in, or a year, to see what his real policies are, because they are so exposed to multifamily housing in New York.
I can't read this guy. Mandami he says the right things, but then some of the people that he's putting in charge are a bunch of.
He ran an amazing campaign. He is polished, says the right things, and you're right. I mean, bringing Lena Khan in, what are you doing?
Yeah, dude. If you see the circus freak show that he's bringing in to like be like advisors, it's pretty insane. They're like literally some of the biggest socialists in the country that have some really, really crazy far left opinions. Like they want to reduce down, like they want to go this. Let me see if I can find it. But basically, one of the
I tell you,
yeah,
he seems like somebody that would be a good time to have a beer with. He just seems like a pretty cool guy. Very well spoken, very smart. I don't have to agree with his policies, but I gotta respect the campaign he ran.
Yeah,
and look, I want him to succeed. As a New Yorker, I want him to succeed.
Let me tell you something. There's this guy in New York. I mean, not New York, in New Delhi. His name is Arvind Kejriwal. Okay, when he first came into power, he did all the same shit. Basically, you know, as a politician, he was just like, "Oh, I'm going to do this. I'm going to do that. I'm going to promise this. I'm going to promise that." And it's really easy to promise people everything, but it's really hard to when the time comes to deliver. Because the thing is, like, look, I could come in and say, you know, this is like the class president that comes in and says, "I'm going to abolish homework, pizza every day for lunch. I'm going to abolish homework. You know, I'm gonna shorten the days from 5 days a week to 3 days a week." I mean, you can promise a whole bunch of shit, and then once you get in power, it's like, "Hey, sorry guys, I tried, but I can't do pizza Fridays, and I can't do 3 days a week, and homework, you're still gonna have to do it." You know?
I mean, the one thing that worries me is Matt, you're killing me, Smalls. You're killing me.
What is he?
He said Steve promised me love. He lied. Oh, Matt. The one thing I'm very worried about is energy prices in New York. I think they got to figure something out. But
Yeah.
all right, let's get into Cisco. And it's actually interesting because you brought up Finance Junkies. This is the first stock I pitched on Finance Junkies, I think. It was either Cisco or it was me saying Tesla was overvalued. It was one of the two. I think it was Cisco. So I put together 9 slides for you.
By the way, just to show people like some of the people that he's putting in charge, like he's putting this guy, formerly incarcerated rapper, to serve as the City Hall transition team. My son was convicted and served 7 years in prison in the late 1990s for 2 armed robberies of taxi drivers. I'm telling you, just some of the people that this guy is putting in charge, it's like, come on, guy. Like, you want business operators who run companies, who run organizations, not whatever.
Look, we'll see what he does. The guy give him a fair chance, right? We'll see what he does. We'll see what he does. Gotta give him a fair chance. Anyway, all right. Cisco is a company that is almost back at its all-time highs. Now, this chart is adjusted because of how many times they've split, but on an adjusted basis, we are within a stone's throw of all-time highs. It's taken 25 years to get here, Kris. 25 years to get here, but we're back. And the stock's been doing pretty good lately.
Yeah.
Now, this is where I find it very interesting. Everybody thinks of Cisco as a hardware company. They've actually done a very good job of diversifying the revenue mix. Only 52% of the revenue is from hardware now. Services and security is almost 40%. So the way Cisco works is they sell you the firewalls, the WAPs, wireless access points, and the switches. They then have subscription models for those products to run, and then they have layered security on top of it, Cisco Umbrella, and some other products for your security stack. So they sell you the freaking ice tray, and then they also charge you to keep filling it up and freezing it. Now, here's where things get interesting. Since 1999, Cisco has grown their revenue by 375%, annualized rate of 15%. Net income has grown at almost 16% annualized, and it's grown by 391%. And since 1999, they have repurchased 44% of the company. And they stopped issuing shares in 2000. Since 2000, they've repurchased 47% of the company. So this is a company that is buying back a fuckload of shares every year, too. 1.88% of the company they buy back a year. We all know the CapEx spend that's happening. 2024, the big four, $217 billion. It was a year-over-year increase of $77 billion. Over the trailing 12, they've spent $330 billion, up $112 billion year-over-year, and they're expected to spend $355 billion according to the conference calls. Now, that's significant because as more data centers come online, you're going to need more networking hardware. And in Q1, which Cisco just reported, they booked $1.3 billion in AI infrastructure orders from hyperscalers, split between Silicon One-based systems and optics. And management came out saying that they're expecting $3 billion of AI infrastructure revenue from hyperscalers alone in this fiscal year. And then on the enterprise sovereign and neo cloud, they took in over $200 million in AI orders, and they launched an NVIDIA-based data center switch that aligns with NVIDIA's Spectrum X cloud. And they're the first company to partner with NVIDIA on a networking basis, which is huge because they're the largest chip maker for data centers. Free cash flow over the past decade, $138 billion of free cash flow. They've done $83 billion in buybacks, $60 billion in dividends paid.
Yeah.
Dividend, 2.1% yield now. You got 14 years of continuous growth, 2.65% 5-year growth rate, and a payout ratio of under 50%. So you're getting a growing dividend at a great payout ratio.
No, don't get me wrong. I'm not discounting Cisco by any means. I'm just saying, is there anything right now in this current market that has that 3, 5, 10x potential that the market is not currently looking at? You know, I mean, look, Cisco, Cisco's going to do like a good 10% per year for the next 5 years. Like if you want like a nice 10%, 10 to 15% on good years, like, growth rate, by all means, Cisco is not a bad place to be. I'm just saying, where's that grower? Like, are there any businesses that are so undervalued that people are just ignoring that could revert back to the mean again and, could bring about some really good results for shareholders?
I don't know, but I think Cisco can beat the market at this valuation, paying under 20 times EBITDA, paying 30 times for current net income, and only 23 times operating cash.
What's the PE on them? Especially on a forward basis.
On the next slide.
The only reason why is because, like, I looked at their
19 times this year.
Yeah, but see, this is what I mean, Stephen. Look at this. Look at the growth rate on this thing.
Yeah, it's not a lot of growth. It's 16% over the next 2 years. It's a low grower, but it's undervalued, and it's got staying power. And I think it is going to get more data center revenue than what management is leading on. And I think that this has the ability to beat the market.
I mean, their growth rate isn't exactly like, let me see. The growth rate, their steady grower at, hold on, let me just do a 12-month trailing to see if they're accelerating growth. Sorry. That's net income. Let me just do their revenue. Total revenues. I mean, they're pretty flat in total revenues. Total revenue change. They went down in last few quarters, and then they kind of reaccelerated back up here again. There's probably some seasonality here. But I don't see this growing that much on the top line. I mean, unless there's some really big bottom line savings, it's like, yeah, and bottom line savings are, actually, no, sorry. Bottom line savings like 2.7. Yeah, I don't see that tremendous amount of upward value in this, especially on a 19 PE for this. I'd say I'd pay like 12 PE for this.
I mean, come on, that's getting a little crazy. That's getting there's
plenty of other companies out there.
There's value to be unlocked here.
Okay.
There's value to be unlocked here with the data center spend. And once all this hardware is deployed, you're going to have a huge refresh cycle for all the previous stuff, and they're going to grow their services and security. It's a sneaky play. It's still undervalued, especially when you look at where the rest of the market is trading. Now,
but that's what I'm saying. If you would have brought this and said at 47.50, that would have made a lot more sense, Stephen. Like
look at where it was when I told you guys about it.
I know you were right then.
Under there.
I think you were absolutely right then to bring it up during 40s. But dude, at $70, $80, I mean, like I said, if this was growing at a much faster pace, I'd totally be on your side.
It's not going to grow at a faster pace.
Right. So then the question is, why would you pay 19 times for a business like this that's not growing top line that much? You'd probably give it more of a reasonable multiple around, let's say 15. 15 would be good, not 19, 20. On a forward basis, what is it going to, I mean, let's just look at the model, right? What is it going to do in the next
you want something that can pump next year?
I'll take that. Why not? That's what we want, right, guys in the chat? Let's go.
You're gonna hate this. You're gonna hate this.
Don't say fucking Palantir. If it's Palantir, don't bring it up.
It's not Palantir.
Okay, good.
And let me get the sentence out before you shit on it, because you're going to shit on it.
PayPal. It's gonna say PayPal.
I'm not going to say
Let
PayPal.
the chat guess. Let the chat guess.
All right.
Chat. Who do you
Oh,
think?
the chat already got it. Chat already got it.
MSTR? Are you gonna say MSTR?
No, I'm not. So, SoFi can pump next year for 3 reasons. Okay.
I'm all ears. I'm all ears.
S&P 500 inclusion.
Mm-hmm.
Noto has PSUs at 35 and 45 that he's going to try to hit.
Okay.
And people are going to look at this as a catch-up trade, because they're going to look at what Robinhood did to go over 100 and be like, I missed that. What's the next one that's going to do that? SoFi's trading around $30. Let me go in that and try to get a triple.
What's SoFi's tangible book?
Let's not go down that road, Kris. Let's not.
Look at this guy. Look at this guy.
The balance sheet doesn't, that doesn't exist in this conversation.
We literally just spoke about this. Was it yesterday? Right? About looking at tangible book. What happened? What happened to your tangible book?
Tangible book's $5.93.
So you want to pay 6 times tangible book?
But Robinhood's tangible book is only $8.91.
But they're not a bank.
And it's $1. It's $136.43.
But they're not a bank. There's a big
They act like a bank.
They don't act like a bank. They're
They
a
act like a
financial
bank.
services business. They're financial
I mean,
services
the only
business.
difference between Robinhood and SoFi is the bank.
Exactly. The business model of Robinhood isn't let's lend people money and make a spread on the difference between deposits and lending, right? Robinhood is purely a what is that they call it? It's a transactional bit. Every time you transact on Robinhood gets a cut. They pay, they get paid for order flow as their main business, and then they have all these other businesses that go in there. So you can't use tangible book as a good measure for Robinhood, because Robinhood's not a bank. On the other hand, SoFi is.
SoFi also, this will be the first quarter of full level 1 options. You got crypto starting back up next quarter, which could end up being huge, because a lot of people that are older will probably be like, if this is a national bank, I may actually feel comfortable buying crypto on it.
Yeah.
And as rates fall, their NIM is going to expand, which will pump out net interest income, because they've already made a lot of loans at high interest rates. And as interest rates fall, they will be paying everybody less interest on their deposits. So their net interest margin will expand, and the net interest income should explode. So I got to tell you, SoFi is interesting to go to. I think it can hit 50 or so next year. We'll see.
I think the run in SoFi has primarily been because of just the strength of their student loan refinancing business, coupled with the Trump administration pulling back on student loan forgiveness. So I think that's what's really helped, because then what happens is a lot more people are going to be turning to SoFi to do a lot of refinancing, right? To do more of that. So, I mean, okay, here's a question to you. What justifies
the personal loans?
But that's the other thing. Like, what justifies giving them a 50 PE right now when their tangible book is 5?
One, the growth rate's incredible. But look at the personal loans is incredible. Student loan originations is flatlined. Wait until this picks up when interest rates come down. But personal loans is going gangbusters still. You have mortgages and student loans doing basically nothing on originations. You're going to see it up here.
So it's the personal loans that are really driving the NIM.
Yes. There's a lot to look forward to over the next year with lower interest rates with this. Plus then refinancing charges. I'm telling you.
Why is their personal loan originations grown so much?
Couldn't tell you.
I mean, as long as the one thing I will say about SoFi's personal loans is that they don't just give them to anybody.
No, they don't.
They do have a pretty strict lending criteria to their to the a lot of the people that they lend money to are like doctors, lawyers, nurses, some people with like strong income profiles that maybe for some odd reason they needed some short-term liquidity that couldn't be met by other means. But I don't know. That's a lot. Personal loans.
It's
There's
huge.
nothing. The challenge with personal loans is that there's nothing backing them other than the faith of the person that you're lending it to. The credit worthiness of the person you're lending it to. So as long as they can maintain that strict lending criteria and they don't fall victim to the growth targets, they should be fine. That's what tends to happen with a lot of banks, right? You have this great lending business, and then they grow at a certain pace, and then they start running out of clients that fit that profile. So they start bottom feeding and going lower and lower because they have to meet their quotas of originations, right? So right now, if SoFi says, hey, listen, we stopped issuing personal loans at the level we issued 2 years ago because they're just not as many creditworthy people anymore, the stock will tank. So a lot of times people say, well, you know what, maybe this person, they don't have a 750 credit score. Maybe they have a 700. That should be okay. And then 2 years later, they're like, you know what, the 650 guys are not bad. And then 2 years after that, 600, it's okay. It's fine. That's well within our risk tolerances. And I think that's when usually the problems start to happen. But as far as I can tell, I don't know. I haven't done any deep dives on SoFi's personal lending business other than what I saw a couple of years ago, which was good. They don't have any, their default rates are actually pretty good. Can we look at that, by the way? Do you have that up by any chance? Their default rates?
I'll bring up the deck. Just give me one sec.
Yeah.
Because they'll have it in the deck.
And also, what's their cost of capital too? Like how much are they like what's the NIM on them? Like what's the net interest income margin for them?
I don't know off the top of my head. It'll be in the deck. I'll bring up in one sec. But look at this. God damn it. Q3.
Yeah.
Year over year growth rate on revenue was 37.8%. And when you look at their member growth and their deposit growth, this is a company that is still young. Yeah. And that's the main thing. I don't use SoFi. I don't know anybody that uses SoFi, but the fact that their member growth keeps growing like that and their deposit growth keeps growing and they keep doing triple beats, and they're projecting, they said they're going to do between 55 and 80 cents of EPS next year. If they do 80 cents, they're at like a 36 PE next year's earnings, which is cheap considering where they are right now. Let me get their slide deck right now. But listen, SoFi, even though it's ran, this thing can run hard next year. It's got a good setup, and you can get your spread game on. You can sell some call options.
I'm good.
Huh. All right. So what are we looking for? Charge-offs and NIM?
Yeah. Don't use that. Don't do that. Don't use this bullshit. I never like using their investor decks. Put that shit away. Go actually to their annual filing.
You're going to have to do that, Chris.
Yeah, that's fine. Whenever we turn to these slide decks, man, especially for the banks, it's like they try to show you the best parts of their business. I'm like, look, I don't want to look at the best parts of your business.
Come on, they even put the rule of 40 in for everybody.
Yeah, great.
Don't you love the rule of 40?
No, I'm good.
I hate hearing about the rule of 40 so much.
Yeah, let's see.
I actually can't stand it.
This is their slide deck. I want to see their actual, not this. See, this right here makes you look like it's official. No, you want to look at.
I got the charge-offs for you right here.
8K. Okay, sure.
Here. Even though you don't want to use a slide deck, they actually mapped it out for you. easily. So here's the charge-offs.
There it is.
God damn it.
Here, I actually pulled up the actual like filing.
I'll bring your screen up in a sec. So here's your student loan and personal loan charge-offs. So the top one is personal loan net charge-off without sale of delinquent loans is 4.2%. And then when you just have the charge-offs with the sale of loans, it's 2.6, and student loans is 0.69. That's great, actually.
That's what I'm saying. In terms of their charge-off, they're fine. Like they lend to a lot of credible people, so it's so there's two things that I want to see. See, the one thing I've always noticed about them is their allowances for credit losses is always very low. So I'm always wondering about that. I'm like, why is there? And then I remember Kris, data-driven investing. He was just like, they're just really good at, not lending to shitty people. And I was like, okay, that makes sense, I guess.
And right now, their net interest margin is 5.84%.
Agency-backed short mortgage security. I'll have to look at this more. I don't have the time to do this entire thing, but okay, so let's see. Do they have any debt that's coming up? What's the cost of their debt? So they have convertible senior notes in 29, but it's about $1 billion, but that's like not until March. Student loan securitizations, this all goes to 2048. Following warehouse facilities. Total capacities here. They don't have a lot of AOCI losses. That's good. I don't know. I'll have to go through this like line by line by line. This is the problem with banking. You can't just do a quick like 2-second breakdown.
I mean, look, in all seriousness, other than SoFi, I don't see anything that has huge pop next year. I think next year is just going to be a gradual grind higher.
Yeah.
I'm sure there's things that will have a lot of pop. I don't see it, though. And I'm looking for things that I can understand, and I understand what SoFi is doing. And there's a lot of things that are going to come together that I think are going to take the stock higher.
Yeah, I mean, this is the real risk that they have. Like, if the economy deteriorates and the personal loans that they have end up going into default, but that's like any bank, right?
Any bank.
Yeah.
And the fact they're lending to such high credit scores makes me a little bit more at ease with it.
Wait, what? Conditional prepayment rate? What's the rates that they're getting on these damn personal loans?
I have no idea.
Prepayments, loan funding, cash. Let me see. Net interest. Actually, let's see. Personal. I just want to see the damn rates, man. The fees that they have. Whatever. I was surprised that you don't have this part of your like calculations right now. Like what the current average interest rate is on the personal loans that they've issued.
No, I mean, that would take a lot of time for me to add into all the other shit that I track.
Yeah. Annual default rates. Whatever. Like I said, we'll have to really run through all of this shit to get through. Conditional prepayment rate. This is the cost.
I mean, Kris, this is
Yeah.
something that has a lot of catalysts for next year. So if you want something with pop, this can have the pop.
Yeah, you can have it. I'm good. I am good. SoFi doesn't interest me nearly as much as like because the tangible book is just not there for me.
How about Nvidia 250, 2026?
Believe it or not, I'm actually considering Nvidia.
Oh boy.
All
Hold
the
on.
data. Yeah. Only as a quick momentum play. This whole deal with China actually might flip the script on like Nvidia a little bit, at least give us a nice 10-15% rise from here. You know, I think one of the challenges that you have is just the restriction on China is a big market that these guys are not necessarily able to sell into. Now the question is, will the Chinese allow it on their end to be like let their companies actually get Nvidia chips? So we'll see what happens.
Yeah, I mean,
But
look,
I
the thing
think,
about
yeah,
Nvidia right now,
yeah,
we look 2026 is in the books with locked up capacity. So they're gonna have a great 2026. 2027, anybody's freaking guess. But what Nvidia could be something you can get 250 out of next year.
it's definitely possible. The amount of cash flow these guys are generating, it's doable. The other
I mean,
thing
bring it
is,
up on fiscal. I mean, look at the growth rate. It's insane. And give me your code so I can put it in the chat.
okay, sure. Doo-doo-doo.
For anybody that's interested in fiscal AI, which everybody is starting to use except for me because I'm a boomer, we'll give you a code from Kris.
I put it last time. I don't have it like.
Throw it in the private chat whenever you can.
Okay. Yeah. So this is Nvidia right here. Nvidia's financials. Just bring it up. What you let me just share the screen.
You got share.
Okay. So it looks like next year they're going to do about 206 billion in revenue, and then the year after that 270, and then 316. So at least until 2028, their revenue growth looks like it's going to be like pretty high. And then on top of it, just the sheer amount of cash flow that they're generating right now. If you look at it, it's insane. Cash from operating activities is almost $100 billion.
Can you break it down to quarterly instead of annualized? Because when you look at it quarterly, they're on a freaking run rate of doing 120 billion in net income over the next 12 months.
So let me just do this. This is quarterly, and they're going to eventually get to, well, I can't, let me see if they'll let me do LTM. No, they won't let me do LTM on a forward basis. Gotcha. But on a quarterly, this is what it would look like. So they would be generating almost 41 billion in cash by January 27, which is insane, the amount of cash these guys are going to be generating. And then if you just look at the amount of share repurchases that they're doing, where's the cash from financing, share, repurchase of common shares. They're doing about 12 right now, which is half. So by this time, they could probably end up doing like maybe like 15 to 20. No, more probably. Let me just look at sorry. This is cash from operating activities, repurchase of shares, issuances, and then dividends paid. And let me just do LTM. So this year they bought back on a 12-month trailing basis $43 billion in common stock.
Yep.
Cash from operating activities was 83 billion. So a lot of their cash is going towards share buybacks. Yeah, so that could support the share price for quite some time.
And the future growth rate.
Second.
I mean, look, they are expected. They just did 57 billion in revenue, which was a 63% year-over-year growth rate. Okay. They're projecting they're going to do 65 billion in Q4, and that does not include any China spend. That'll be over 60% again. Next year, that means if they're going to do 65 in Q4, you're going to see Q1 at 70 probably, if not higher, which means you put it on a run rate of 280 billion next year at the very minimum. And they have a 55, 56% profit margin. So if we bring it down to 50%, I mean, if they do 280 at 50%, they're the most profitable company in the market at 140 billion net income.
Yeah.
I'm just saying that this is something that's got staying power.
Thank you.
And this can continue to work.
Growth rate is insane, dude.
I mean, you want to pop for next year. Data centers aren't stopping next year.
Yeah. Data centers are definitely not stopping next year. The one thing I will say is that the other guys are in the process of trying to wean themselves off of Nvidia. But as far as I can tell, they're not going to be able to wean themselves off like cold turkey. So at least for the next couple of years, Nvidia's monopoly looks like it's gonna hold. The question now is, how is Jensen going to be able to navigate around the cycle? Because this is unsustainable. You and me both know this. Like the amount of debt that's being taken on to finance these data center construction things, it's not like there's an unlimited amount of money that can keep this going forever. So at some point, this slows down and comes down, but just not yet.
Yeah, I mean, look, I'm in the camp of 2028, 2029, this plateaus. I don't think that it's next year or 2027. I think you got at least 2 more years of build out right now. And I may be out of Nvidia sometime 2027. I think I can ride it through 2026. But look, if the numbers change, I'll change my investment thesis. I'm not married to it. And I know I got to be out ahead of the curve. And if I lose upside trying to be ahead of the curve, I'm fine with it because I'll have more than double my money. And I would rather get out before the implosion and risk some upside potential, knowing that I'm never going to time it perfectly. But this still has ways to go. It's undervalued. I mean, look, once again, Costco is more expensive than fucking Nvidia. I mean, come on. You know what I mean? Like,
I'd love to hear what the chat thinks. What do you guys think, like, with regards to Nvidia? Are they going to slow down? Are they going to keep going? Is it like you think that this is like just a secular growth story from here to the end of time now?
I'll put a poll up. Does Nvidia reach 250 in 2026? Let's see what everybody thinks. Wow.
You know, one of the things that does worry me about Nvidia's growth rate is not necessarily the demand for the AI chips themselves, but the lack of infrastructure to support the AI build out beyond what we have the capabilities to do right now. So even if like
we need more grid.
Obviously. Yeah. AMD can't touch Nvidia's future chips.
And let's not forget, next year Jensen's rolling out Rubin, and it's going to shit all over Blackwell.
Yeah.
I mean, we're already 100 votes in, 88% of the chat thinks we hit 250 next year.
Yeah, it's doable. I think it's doable.
I mean, that's 65 points from here, Kris.
So let's goes to show you, man. Just Mag 7 and chill, right? I don't see anything else.
Saying the big just get bigger.
Mag 7 and chill.
Mag
If
7
anyone's
and chill.
if anyone's looking for an ETF that specifically just covers the Mag 7,
Round Hill, baby, they got one.
Yeah, MAGS.
Yeah,
This one
Round
right here.
Hill.
This one right here. It just covers like the Mag 7 basically. So you can see in April it was down to 41. Now it's back to 67. So if you don't want exposure to anything else except the Mag 7, then this is the one you want to look at. And the way that they have 17% is Apple. I mean, Alphabet. 14 is Apple, Nvidia, Tesla, Amazon, Microsoft, and Meta. That's it. Like, look at this thing, man. You could have just bought this in 3x. You didn't have to do anything. Yeah. Believe it or not, this might not be a bad place to park the cash. I'm thinking about it now. I'm like, huh. I mean, literally the best companies. Yeah.
Can I ask you something in all seriousness? Who's fucking with these companies?
Nobody. The only people that can mess these companies up now is policy. So government policy that comes in and says you guys are too big. I'm too jealous as an entity, and I'm gonna crack down on you. I'm gonna get a Lisa Khan like individual to crack down on you. That's what would crack these guys. You know, antitrust, anti-monopoly, and then you have privacy concerns with some of the guys like Microsoft, with Meta. Amazon could get unionization scares here and there, but doesn't look like they're going anywhere.
No, it doesn't.
Yeah.
I mean, if I was to build out how much cash all these companies have on the balance sheet, it's insane. I'm actually going to do it right now.
Yeah, go for it.
Can we just do Spectacular 6 and say fuck Tesla?
Yeah, but they don't have that.
I know, but Tesla doesn't even deserve to be there.
Got a lot of people in the chat who love Tesla, dude. Don't do that. They'll come after you.
Listen, I'm not hiding. You know what I mean? I'm using my real name. I'm not hiding.
I learned a long time ago. Don't come after Palantir and don't come after Tesla. Those are the two companies that you don't speak ill about, because the investors in both of those companies are absolutely like gung-ho insane when it comes to defending their boys. So.
Listen, I'm with it. I completely understand it.
Yeah.
So I'm gonna give you. This is gonna be crazy when this is. I'll have it built down in a minute. So I'm gonna give you cash on hand, long-term investments.
You know, I could do this on Fiscal AI faster than you, right?
Well, then do it.
I could just. Okay, look. So basically, with this, so you go here to charting. Right, you put in all the ones you want. So you want to put Amazon, Microsoft, Apple, Alphabet, Meta. Anyone else you want me to put on there?
Yeah, the Nvidia, all of them.
Nvidia. You said don't put Tesla.
Oh, you said I have to.
No. I mean, I'm saying don't just respect the.
Yeah, so you said we have to.
All right, fine, whatever. I'll put them on there. So what did you want to see? Just how much cash that they have?
Market cap. Short term and cash on hand, so on hand liquidity.
So let's just do market cap first, right? So actually, I had the wrong bar. This one, market cap. So these are all the market caps. Let me just move this, and I will change this to. Damn it, I can't toggle the thing. So this is all the market caps that they have. So let me just annual, and I should be able to by company. So market cap of Meta is 1.68 trillion. Alphabet is 3.8 trillion.
Yeah, this is. I want it all over. This is not. Nah. Mine's.
You want to combine them together?
Mine's going to be better.
Okay.
Don't you worry.
$4 billion market cap.
Kris and I are in a race right now, ladies and gentlemen.
We're not in a race.
We're in a race. And I'm 50% of the way done. Amazon's going to scare the shit out of me right now. I did not realize that Amazon has 94 billion in cash on hand.
Oh, you want to see cash on hand? Okay, let's see.
I said that from the beginning.
Hold on. Not change shares.
This weekend, I'm going to ask Gemini to code all this shit for me and figure out how to do it just immediately.
Here, this is how much cash that each one of them has. Right here. And you can all put it together in one shot. There you go. 470 billion.
Okay. How much long-term debt do they all have? And then revenue, EBITDA, cash from operations, free cash flow.
You want everything in one shot?
That's what I'm doing.
Go ahead. You do your thing, man. Meta has 44 billion in cash. Then Google's got almost 100 billion in cash. Apple's got 54. Microsoft's got 100 billion in cash. These guys are just juggernauts.
And this is why I wanted to do this exercise.
Mm-hmm.
There's no reason not to own these companies.
If anything, this is, let me see if I can get their cash flows, like their operating activities, operating cash flows.
I mean, I just don't think anybody can mess with these companies at this point.
Okay, look at this beast of a chart. These companies together combined generate 750 billion in ops cash.
Oh, see, I like that. Very nice.
Operating
Very nice
cash. Yeah.
You may make me go get a subscription to that now.
Yeah. Tesla is the weakest in terms of getting cash from operating activities. Nvidia is the fastest growing. Amazon has just a buttload of cash coming in, but remember, Amazon spends a lot on CapEx as well. Microsoft has the most cash from operating activities, almost 150 billion on a 12-month trailing basis. Google beats all of them. Google has 151 billion in ops cash.
And when you start putting it in this lens, it makes you wonder why you're even messing around with these other companies.
Meta's got 107 billion in ops cash. So, yeah.
You know what I mean? Like, how do you go against these companies? It just doesn't make sense.
Yeah. I mean, just look at this Meta. Like, let's just look at price to operating cash flow. Who's the cheapest price to operating cash flow? Is probably Meta. price to operating cash flow. Let me just hide this. And let me just put a little bit closer. Tesla is the most expensive at 92 times price to ops cash. Meta is the cheapest at 15 times operating cash flow. Nvidia is 53.
When you look at Tesla versus these other companies, it does not deserve to be in the Mag 7.
Dude,
Full stop.
Stop pissing the chat off, man.
Full stop.
Stop pissing the chat off, dude. What's wrong with you? I told you we're gonna lose. You're gonna lose subscribers.
Look, I'm still a Tesla shareholder.
That doesn't help. You don't badmouth Elon. You know how it works.
I know Elon is.
Don't mess with Father Elon.
Do not mess with Father Elon. Oh my God, I'm almost done. We have to put in 3 more fucking cells.
Kris is not defending Tesla or Nvidia. Kris is just trying not to pick fights. Like, that's my New Year's resolution. Stop picking fights with cult members. Okay. If you believe that the second coming of Jesus is Elon Musk, by all means, you believe in that, son. I have no argument against that, you know.
Wow, Kris.
As you get older, bro, you realize, like, why pick fights with people? There's no point. You know, people want to believe what they want to believe. That's fine.
All right. This is some scary freaking numbers right here. Scary numbers. So the combination of the Mag 7 have a market cap of 21.5 trillion. They have 500 billion in cash on hand together. Like, how do you even go to war against these companies with another 205 billion in long-term investments and only 235 billion in debt, and they're doing 2.24 trillion in revenue already? 817 billion in EBITDA, 747 billion in cash from operations, and 390 billion in free cash flow. Like, how do you go to war with these companies? When I see numbers, and this is why I want to do it like this, when I see numbers like this, it just makes me think, who the hell is dethroning these companies? This isn't 1985.
Bernie Sanders, Elizabeth Warren.
You're right. Policy is the only one. You're not dethroning companies. And this is why I got ahead of Google than the Bears, because I said a company that's got 100 billion in cash, that does 100 billion in net income, is going to figure out a way to protect their net income. They're not doing $1 billion. And it's insane numbers. These fucking companies are doing over 2 trillion in revenue, 7 companies. And they're all, except for Tesla, they're all growing. You know what I mean? Like, they're all growing.
Yeah.
None of these companies are expected not to grow.
Yeah, the question is, when are they going to get broken up?
I don't think they do.
Why?
Give me a breakup case for Alphabet. Give me a breakup case for Amazon.
The breakup case for Google is, I am a politician and I think we should tax the rich.
100%, you're right. Let's give me an actual big. Let's do Amazon, because that was Lena Khan's big thing, right? Give me a breakup case on Amazon. What's a breakup case?
The breakup case is, I don't like Bezos. I don't like progress. I want the mom and pop shop to be able to sell their wares without having to get out competed by big tech.
And what I would say to that case is, because of Amazon Marketplace, you're allowing small businesses to reach a national audience instead of only selling to their local community. So even if they have to sacrifice $1,
It doesn't matter. I'm the politician. I'm in charge. Fuck you.
I
You don't get
forgot.
to
So
say.
sorry, politician. So sorry.
Yeah,
You're right.
you're not allowed. Sorry, that's not
Logic
how it
is
works.
allowed in this realm. I'm sorry.
Logic is not how it works. No.
Yeah, but that once again, that's why I'm just I look at this and it's just
You need to start paying all your workers.
bigger, just going to get bigger.
You need to start paying your workers $85 an hour, because I think it's right to you pay people $85 an hour. You want to argue against that? I'll make it 100.
Okay. How many hours are there in a year that we work? 2140?
It doesn't matter. Doesn't matter.
No,
you can't have a yacht. I do not like that you have a yacht. I don't like that your shareholders have gotten rich. I don't care about all that. I care about people not having money.
All right, I'm sorry. It's 2080. It's 2080 hours. At 100 an hour.
We need to do 98% taxes again on the rich.
I'm just saying, Mr. Politician, at 100 an hour, your minimum wage would be $208,000 a year. Just saying.
That seems kind of low. I think we should.
Seems kind of low. Okay, yeah.
I think we should do 400.
400?
400,000 a person.
400 an hour get you at $832,000 a year, Mr. Politician.
Perfect. I've solved income inequality.
Great.
See that? You see how easy that was? You see how easy that was? I solved income inequality. That's how it works.
I'm with you. Listen, I want 400 an hour.
I'm solving inequality, bro. That's how it is. India did 97% tax the rich in 1997, and that's where everything went to cash only. 280 a year compared to $1 billion a year. Yeah. Remember, I don't care works both ways. I could see them trying to tax unrealized gains.
Oh, they're going to try. You believe it. Then the next step is going to be trying to tax 401k plans because they don't want to wait until you retire to get that money.
Yeah. We'll see what happens.
No, we'll see.
I think the biggest change would be corporate taxes getting raised from 20% right now to like 35 again. That could really hamper a lot of earnings. Another thing is taxes on share buybacks. Like if a company does X amount of money in share buybacks, a percentage of it, I mean, that's already in there. A portion of it has to go into additional taxes. I'm telling you, the cudgel is coming to, I just can't say when. Right now, the current administration, they're pro-business. They're pro-business. So you're not going to see any sort of major changes that's going to disrupt the current system. But I think at some point, if income inequality gets too much, I think that the country will elect a certain set of politicians that will come for these guys, and they'll come from hard. Like, I mean, just look at what happened with Google. Almost got broken up. Lena Khan came after Amazon. I think Meta had a whole bunch of things with their business. I mean, yeah.
Look, I get it, and I do think that it's a problem, but I don't know how you solve it except.
What is this? 24 Golden is a rapper, the show he missed last night?
So I guess Amit is interviewing a rapper right now, and he's been sick since Saturday. Mm-hmm. And he didn't do his market live or market close today, and he didn't do his future show last night. And he's interviewing some young rapper right now about his portfolio, and the chat is saying, this guy is like me because he has 100 companies he's invested in.
Wait, the rapper has 100 companies he's invested in?
100 companies that he's invested in.
Good for him.
I know.
The guy's literally investing in the index by creating the index himself.
Pretty much.
Yeah.
Pretty crazy.
Yeah. No, this is, like I said, the only thing that could derail the current system is just, I I mean, there's also talk of credit market issues. If credit markets come around and they have issues, you could have problems. But I don't know.
Kris, you guys see these names that this guy owns.
Okay.
And keep in mind, I don't know how old he is. He looks like he's like 22.
Okay.
Can I can share the screen. If I don't play it or anything, I can share the screen.
Yeah,
right?
yeah. Go for it. Yeah.
All right. Look at this. I'm a little shocked this guy owns Schlumberger, to be honest with you.
So this is what he owns: VTI, which is good, Nvidia good, VO good, Google good, Hims okay, whatever. Apple, Hood, Nebius, Meta, Jeppy, Oklo, Costco, Tesla, ASTS, Microsoft, Oracle. Huh. I mean, he's got good companies.
I wasn't expecting this. This
is all good.
Think about this guy. He's got to be in his early 20s. He owns Devon and freaking Schlumberger and Oxy. Like, very surprised.
He
in there.
He owns Schedule Rocket Lab, Palantir, Main Street Capital. I mean, he's got some garbage in there too, but not a lot.
I mean, but the stuff that we're thinking is garbage are probably moonshots that are well insulated.
Yeah, unless we saw like what the total percentages are. There are some garbage in there, but most of it's good. I mean, it's diversified. It might be a little too diversified, but he has all the right things that I would say. Warner Brothers Discovery, he's got
Berkshire.
I think this is my dad used to do this, dude. My dad used to get on CNBC in the morning, like in the 2000s before he lost all his money, and he would just say like, "Oh, what are they talking about?" And he would just buy some stocks, like it's not a lot, but he would buy some. And so one time his portfolio had like 80 tickers. And I was like, "What are all of these tickers?" He's like, "I don't know. I just saw them on CNBC." You know. Look, I know everyone in here is like, "Oh, there's too many stocks." The guy is actually probably beating the market right now.
Oh, he's definitely beating the market.
I'm seeing some bangers in there, dude. If he's got enough, right?
I'm seeing a lot of bangers in there.
Mm-hmm.
And look, he's got infrastructure plays. I mean, he's got Taiwan Semiconductor. I mean, this kid's a young kid.
He's got good. They're good.
I mean, she's got International freaking Paper in there.
Amcor, which is good. Kratos.
Datadog.
Shit, I might have to grab this portfolio myself. Like I said, it just depends on what his positioning is at this point.
By the way, thank you, Poopfool7915. Steve was low-key correct about the Paramount deal. Yep, Mr. Tinfoil had himself.
What about the deal?
Tinfoil had himself coming out to play.
What was your thesis? Did it play out?
So on Friday night on the after hours, and on Saturday and Sunday, I said, and on a midstream on Friday afternoon, I said. So I said on a Friday afternoon stream, the market closed. I was driving through the city, and I said to him, "Don't be surprised if Larry Ellison and David Ellison come over the top and offer a bigger deal, call the administration, wink, wink, nudge, nudge, and screw over Netflix somehow, because I don't think that Netflix and Warner Brothers is going to pass the sniff test when it comes to regulators, because it'd be too much of a monopoly."
But Paramount doesn't have the cash, though. I don't know how Paramount's
they do. That's why I went through on my other video. They do. They just offer $30 cash per share. How? Larry Ellison is backstopping it with freaking the Saudis now, and Jared Kushner's freaking investment firm.
Really?
Oh yeah, they made a $30 off. I'll play the video with the David Ellison right now.
Is there some kind of is there like a gold mine underneath like Paramount? Yeah. I mean, Warner Brothers headquarters or something we don't know about?
There is.
Dude,
just give me one sec. I won't watch this with you and see what you say. But so my thesis was that they're going to come over the top today or tomorrow. and they're going to do a tender offer, so it forces a shareholder vote. And if it gets declined, they have to disclose why they declined it. And they came out over the top, and Trump over the weekend said the Netflix deal is going to get pretty hard. And the big differentiator between the two, the Netflix deal does not include the legacy networks. That's going to go into a SpinCo company.
Yeah.
Ellison's deal is for everything. So guess who owns CNN? Larry Ellison. You don't think that they're telling Trump, don't worry, CNN will be right leaning in a year.
Check this out. Look at this. This is the. Huh.
Yeah, I know. I went through all this in the video I did at 6:30. I did everything. The Ellison family, Redbird, and Affinity Partners is Jared Kushner's firm.
The termination fee would be 5.8 billion payable by Netflix, and then this one would be 5 billion by Paramount if they can't raise the capital. But I mean, if they got these backers, then they'll get it.
Right. So what I said that they're going to do is, now tinfoil hat Steve said the board is going to come back and tell Ellison we want 32 a share, and for you to pay our 2.8 billion walk away fee from the deal with Netflix, and they're going to say sold. Because Netflix has a 5.8 billion one if they can't get it over the line, but if Paramount goes with another company, they owe Netflix 2.8 billion.
Dude, this seems like a bullish thing for Netflix, dude. Netflix shareholder going to be off the hook.
Oh, this is not a great deal for Netflix in the short term. It's a good deal in the long term. But yeah, listen to that. Hold on.
Dude, if this doesn't work out for Netflix shares are going to rally. Yeah, Netflix will go to like the 120s.
Yeah, you ready for David Ellison, what he says?
Yeah.
Ellison, the chairman and CEO of Paramount, which this morning has launched a $30 all-cash tender offer to acquire Warner Brothers Discovery, a company that I believe you bid at the last count 6 times for.
Correct.
But did not come up with the prize that you sought, hence this morning's news. David, why are you doing this?
So look, we're really here to finish what we started. Like, just to kind of take you through the road in terms of how we got here. On December 1st, we made an offer to acquire Warner Brothers Discovery to their board. Had a conversation with David Zaslav. He came back with a bunch of issues. We then on December 4th sent in a bid that addressed every single one of them that is superior to the bid that they signed up. Our offer is $30 a share, all cash, $41 billion in equity that's backstopped by the Ellison family and Redbird, $54 billion in debt with commitments from Citi, Bank of America, and Apollo. We have faster regulatory certainty to close, and our deal is pro-consumer, it's pro-creative talent, it's pro-competition, and we believe that when you actually, to further contextualize, our $30 in cash, $30 a share, is basically $17.6 billion in cash more than the $23 in share that they signed up.
Right. Well, you're not obviously paying. You're paying for global networks. Their deal doesn't involve paying for global networks, which are traded as its public company. Which, by the way, also figures very prominently here in trying to determine what the overall value of the respective deals are, because there are $27.75, including obviously the stock portion of their deal. But it also includes, well, what's global networks? Is it a $2 stock? Is it a $4 stock? What do you see? Because that can go a long way in terms of at least determining why the board may have said, no, we think Netflix is superior.
So respectfully, we think that basically that's valued at $1 a share. I think if you
why
look,
$1?
So if you look at Versant, where the median of all of this is, it's about 4.5 times. You have to get to 5 times equity value or more to basically get to the kind of $3 plus that you're claiming. But again, I think the most important thing to go back here is, look, we're sitting on Wall Street where cash is still king. We're offering shareholders $17.6 billion more cash than the deal that they currently have signed up with Netflix. And we believe when they see what is currently in our offer, that's what they'll vote for.
Were you told during the process that cash is king?
Yes, absolutely. What we were told repeatedly was that they wanted all cash. We delivered all cash. We were asked that they wanted it to be fully backstopped by the Ellison family and Redbird. We delivered it fully backstopped by the Ellison family and Redbird. And when you look at the scale of the companies, right, look at the scale of Netflix. 310 million global subscribers. When you combine the number 1 streamer with the number 3 streamer, that creates a company that has unprecedented market power, north of 400 million subscribers. The next largest competitor is Disney with just under 200 million. That's bad for Hollywood. That's bad for the creative community. That's bad for consumers. And look at how the market is reacting to this deal. We are literally seeing talent talking about the death of movie theaters. We've all heard Ted Sarandis' comments about how he feels about the theatrical experience. And you've also seen, and our deal is also offering more cash for shareholders.
Makes me kind of bullish on Disney, to be honest with you.
Yeah, I don't know about Disney. I don't like Disney, but that's just me.
I mean, dude, Warner Brothers is getting taken out for $100 billion. Disney's got way better assets. It's trading at a 15 PE. Its market cap is $200 billion.
So
they don't have nearly the amount of debt as these guys do.
Hold on.
Okay.
From a media empire, I wouldn't say way better assets. I'd say similar assets. But Disney, yeah, I mean, in all seriousness, Disney should spin out the fucking media into a separate company and keep parts and everything else segregated.
I mean, they generate a lot of their operating income from their linear networks are dying, but they still generate good free cash flow. You know, the challenge is they've transitioned to streaming, but that's taking a very long time, you know. So let me see if I can pull it up real quick. So this is Disney after the acquisition of Fox and all those assets. It's been kind of languishing, but if you look at their financials,
so guys, when I say that, I understand that Disney has Marvel and Star Wars. I get that. Disney itself, from what I've seen, none of my friends' kids give a shit about Mickey Mouse or any of those cartoons. They watch all the cartoons on Netflix and YouTube and stuff. So when I think about their assets versus Warner Brothers Discovery, you have Warner Brothers assets through the studio. You have HBO Max, Discovery Food Network, DC Comics. I mean, and I'm not talking about the parks and everything else. I'm just talking about the freaking media assets.
I mean, we can see right here. This is like their entertainment revenue, their let me see if I can pull up entertainment, because they had to change up experiences, sports. Yeah, their entertainment revenue is up there, but I don't care about that. Paid subscribers. This is what. Let me just take this away. They've got US domestic. They've got almost 58 million subscribers, almost 60 million subscribers. And this is like in 2020, they had, come on, load faster. I guess it doesn't show. They have almost 59 here, and then internationally they have paid subscribers is almost 72 billion. So total, they've got almost Disney Plus paid subscribers. $130 million paid subscribers. It's up there, man.
Oh, it's up there. I just don't think they're going to let Netflix acquire Warner Brothers, I think it would make too big of a company. Because it would give them about 430 million. And the next biggest one is Amazon then Disney. I just don't think they're going to let it go through. And I think Kushner getting involved, the administration, not happening.
Okay.
And we'll see.
Yes. Yes. Disney Europe, Disney Tokyo, the cruise lines. Bro, Disney's got a lot of income. Disney's a behemoth, hard to compare. Pure play streaming. Yeah, but pure play streaming is like their growth engine. So we have Disney parks ever cheap. Local pumpkin catch expensive. Yeah. Yeah, man. I don't know. I don't think the deal with Paramount would be good. I think it would actually screw over Paramount. They would be loaded up with so much debt. It's insane. But then again, they also generate a lot of free cash flow.
Oh,
that they can use to pay
boom.
down the debt.
Check
What?
this out. Even Tevis. Even fucking Tevis. Look at this. Seems like your thesis may be playing out. I've been saying this shit all weekend, Chris. All fucking weekend I've been saying this.
All right, good luck. That's all I'm gonna say. Good luck. I am gonna go get some rest. I have work tonight, so see you later, Steve.
See you later. Thanks for coming, Chris.
Yep. Bye.
All right, everybody. I just told Tevis he should have me on to discuss Warner Brothers Discovery. So, are there any companies you guys want me to research? Chris wasn't that big of a fan on Cisco. He wants something with Pop. Looks like he's starting to agree on Nvidia a little bit. We'll see what else. Movie time with Steve, maybe in a few minutes. I got the pen out. Let me oh wow, SMCI. Geez, look at all those SMCIs. Yeah, KOPN. A lot of people want that one also. I don't like these really small companies. You guys know I don't dabble in this. It's not my forte. I'll look at it again. Meta, okay. I could do hours and hours on Meta. No, we have roughly the same amount of people. You know what, June? Qualcomm is something that I really like, actually, believe it or not. I've liked Qualcomm for a while. I haven't looked at it recently. AMD. You want to hear an AMD story, everybody? AMD is one of my worst freaking moves ever. I used to swing trade it back in the day when it was trading between 5 and 7. And I got to tell you, I got caught. It went down to 3. I bought more. Went down to 2. I bought more. And this is back in like 2012, 2011, that area. And they had just come out with the APU chip. Maybe even been before that. Anyway, it stayed under like 250 for 2 years or so. And I said, I just want to get my money out. It finally got back to 368 and I sold the entire position. And the position was pretty large. Needless to say, that was the one time that AMD never freaking went back down. And let's just say that today's value would be worth, oh my God. This is going to be heartbreaking. $1.72 million would be today's value of the amount of shares I had. That wasn't that. That kind of sucked. That kind of sucked. Yeah, could you imagine having a lot of AMD and selling it at $3.68? Crazy. That's me. In all seriousness, Bitcoin wasn't even out yet, I don't think. Or if it was, yeah, no, Bitcoin was out, but I think I got out of AMD in like 2015, 2014, that area. I would have never fucking held it. I mean, God forbid I didn't. If I didn't sell, I gotta think I would have sold it at like 10 or 15, so it doesn't even matter. So it's all good. That's not, listen, that's not Lambo money, guys. Got news for you. I would still be on this stream right now, even if I held AMD. 1.7 mil is not Lambo money. No, you didn't, Charles. Jesus. Jesus. What is Lambo money? Not 1.7 mil. I can tell you that much. All right. It's 10:53. I'm going to go until 11 and then I'm going to go watch TV or watch a movie or something. So what does everybody want to talk about? Just shoot some stuff out. I will agree 17 mil is Lambo money. I will agree to that. Change where the decimal is. Believe it or not, I watched Underworld Rise of the Lycans the other night, and it was awesome. I haven't seen it in a long time. And I watched The Gentleman, which is fucking amazing. I have no idea what I'm going to eat while I chill. I can't tell you. I have no clue. Yeah, I need to watch F1. I don't want to watch it right now, though. Bev's Powerhouse Gym? No. Wake up late? I'll be up at 7:30 tomorrow. I only need 5 to 7 hours. Have I bought anything new this week? No, but it's only Monday. No, I do not trade out of bed. I don't want to do a deep dive on VG. Every time I look at it, it's mixed for me. I really don't want to do that to everybody. I know everybody's in it. Listen, if the Fed cuts, we're pumping. If the Fed doesn't cut, we're dipping. Memento's a great movie. I should make a trip to the casino. I'm with you on that one. Yeah, I think Fed is cutting. No, listen, Aaron Boone's not horrible. It's Cashman that needs to go. Cashman sucks at life. Sucks at life. I swear to God. Next live stream is going to be tomorrow, and probably do a market rewind tomorrow night. We'll see. Mandalorian was okay. Steinbrenner is rolling in his grave. I can tell you that much. Steinbrenner is rolling in his freaking grave. Macadamia chocolate chip cookies, I'm with it. I'm with it. I like it. Google should not bid for Warner Brothers. Actually, maybe they shouldn't put it on YouTube. Interesting. All right. Well, I appreciate everybody being here. I'm going to go head out. This is what I think we're going to do. Maybe because of the amount of people that said freaking VG and SMCI, maybe there'll be a stream tomorrow about SMCI and VG. They're both on the notepad. If I feel I can do enough research on them, we'll do it. We'll do it. I also got to get Agent Steve on to talk to him about trading. But yeah, we'll try to do SMCI and VG tomorrow. And thank you everyone for showing up. Really appreciate it. Cookies and milk. Yes, I'm awake. I'm very awake. I'm going to go relax for a little bit. Maybe have a glass of milk, some cookies. Enjoy the rest of the night. So what is it? Before I go, does anybody know what Agent Steve's Twitter handle is? So I can message him. Oh, thank you so much. I truly appreciate it. Thank you so much. Thank you, Papgata. At Asian Steve, that can't be his handle. Come on, really? Paper Gains? Okay. Paper Gains Inc. Okay. Oh yeah, this is okay, perfect. All right. I will I'm gonna reach out to him. All right. Thanks everybody. Have a great night. We will see you tomorrow. Let's say 7 p.m. Yeah, 7 p.m. works for me. Hopefully works for all of you. And see you tomorrow. Have a great night.